Hello everyone and welcome back to the channel. On today's video, I am going to go over a strategy that I personally use to trade the SPY, which as you probably already know is an ETF that tracks the S&P 500, the biggest index in the stock market. Now the SPY is extremely popular. There is a lot of volume and it is extremely liquid, and that's why a lot of traders like it, because you can get in and out of a trade very easily. You don't have to wait a long time to get your order filled on a buy side or sell side order. Now in this video, the strategy that we are going to be going over, which is just one strategy, and there are many different strategies when trading, is going to be based off of options. So we're going to dive into the options chain and we will show you how to look at these options to determine what the risk to reward is on that particular position and if it actually works at that given time. The brokerage we're going to be using, the examples that we're going to be showing on today's video will be from Webull. If you want to sign up with Webull, affiliate link is down below. Use that affiliate link, you will get 12 free stocks valued anywhere from $3 to $3,000 per fractional share. If you are to sign up, please deposit $100 US because then this channel will also be rewarded with one free stock, and I do appreciate it. So let's get right into it. We're looking at the chart for the SPY, ticker symbol SPY, tracks the S&P 500. And these are the Spider S&P 500 ETF Trust. So let's dive right into it. There are two things we need to consider, two things that I just need to state out front because they are important. Time frames matter. Me personally, I look at the daily time frame, which is what you see right now, and I look at the weekly time frame, which is what you see right now. My technical analysis is color coded. So anything that you see here that is a green line is either a green supply and demand zone, a daily supply and demand zone, or a daily trend line. Anything that you see in white, for instance, if we go to the weekly and we zoom out, here you can see that that is a resistance line from back in 2020 that will show up on the daily chart, but when we are on the daily, we zoom out, we can't see it. So I do some technical analysis back on the weekly to show up on my daily chart, but I want to know where it's coming from, and that's why those lines are white. W for week, W for white. So that helps me understand when looking at my chart where each line is coming from, and then I can assign a level of importance, because a supply and demand zone that goes back to the weekly chart is very strong. That is going to be a very strong support line, and there is probably going to be a bounce if we get there. So if we were to get to that white line, I would be a buyer of the SPY. Supply and demand zones on the daily chart are also quite strong, so I would probably be a buyer at those levels as well. That's why I use daily and weekly, because the supply and demand zones support and resistance level on, let's say, a 5-minute chart isn't going to be as strong, and it's likely going to break rather quickly. So if you're scalping and you're in a trade for maybe 5 minutes, that might work, but that's not the type of trader I am. I'm in swing trades. I'm holding some of these overnight, a lot of these overnight, and these are trades that take a couple days to play out in most cases. Sometimes we will get into a real quick swing trade and it actually might be a day trade, but that's not the most common thing that happens. A lot of times these trades take a couple days to play out. So essentially what I am doing is really simple. All I'm looking for are supply and demand zones and trend lines, and I will look at the major moving average of the 200-day SMA, the 200-day simple moving average. I will have that displayed, and sometimes I will also throw in the 200-day exponential moving average, the 200-day EMA. And I will basically just draw horizontal lines at prices where the stock has bounced or been rejected. And typically we look for spots where it has bounced or been rejected multiple times. For instance, as we can see here, the stock was rejected at this price point right here at 350 on the SPY. And if we zoom out, we can see that we have a cluster of peaks, one here, one there, another one right here, and we're currently at that level right here. So that is a resistance at around $415 a share. We also see that we have a trend line where in the most recent rally going back from October, the SPY has actually been quite strong in finding support above the lower low. So that means that we're having higher lows, and that's indicated by this trend line that we're seeing right here. So we're actually setting up for a triangle right here where we're actually technicals would indicate that we're going to see a move to the upside or to the downside. Something is about to happen on the SPY, it looks like, from a technical perspective. We also had this channel back from the peak in December where the SPY continued lower, setting lower lows and lower highs, and everyone was extremely bearish from a technical perspective. But now things have changed a little bit, and we'll see what's actually going to happen. I also look at the RSI, the relative strength index, to try to gauge momentum and if we're overbought or oversold and how all of that factors into the equation. The RSI is just a subgraph, and anything over 70 is considered overbought, anything under 30 is considered oversold, and you can't just trade off the RSI, but it helps paint a picture. So where we're at right now is we're slightly below 70. So this is actually looking quite interesting, and if momentum was to continue, technicals would indicate that we are about to break out on the SPY. So somebody could just go long buying shares of the SPY right now and play the trade that way, but we're looking for something with a little bit more juice, and we actually want to be somewhat contrarian in our bets because the SPY, although it is very liquid and has high volume, it is not extremely volatile. As we can see, last day, which was a Friday, the SPY went up 0.85%. That's actually a really good day, a very strong day. And you can kind of see it's a very big candle. We've had 2 days with very nice gains on the SPY. But that's not what typically happens. You're not seeing 1% or close to 1% each day. It's not sustainable because if we think about what the average return on the S&P 500 is for a year, it's 8 to 12%, somewhere in that range. So you're gonna have a lot of days where it might just stay flat, it might drop a little bit, it might go up a little bit, but you're not gonna have a ton of days where it's up 1% or down 1%. So keep that in mind when you're actually looking for ways to trade the SPY, because if there's a lot of premiums out there, you can actually be a writer of options contracts, which is the strategy we're going to actually dive into today. So let's just dive into the technicals a little bit more. So we're at a resistance, but we do have this triangle, so we could break out. But we know that it's not going to, or most likely, because nothing's guaranteed and no trades are always profitable. We have a pretty good idea that we're at resistance right now, and $420 is a strong resistance as well. And the prior peak right here was $425. So those are pretty much the levels we think we are going to get to before, if we were to break out, before we see some kind of resistance and some kind of pullback and for the momentum to fizzle out for a little bit. So let's dive into the options chain and take a look at this. So if you click on options, the setup that we're going to have is you're going to go from single option to vertical on your strategy down below. You're going to click on both, and then you're going to go to auto, and you're going to click that to 1. So we're going to be looking at $1 spreads. And let's go for end of week, so May 5th. That's the Friday expiration. And let's look at this. So there's 2 different ways you can play this. You can do a call credit spread or a put credit spread. And I'm leaning towards the call credit spread because it gives us more flexibility. And I'll explain why when we actually look at the options contract. So resistance levels matter. Resistance right now at around 415, 416. Resistance again at 420, and then the high resistance at 425, which we're not going to go to because premiums just don't provide enough return at those levels. You can do it, but it's not the way that I like to play it. So ideally, we want to be above 420, so we can do the 421, 422 call credit spread. So what we do is we click on that, And this is what's going to show up. Now, the default is buy, which is a call debit spread. So the default would be to buy the 421 and sell the 422. You would pay $30 to get into that position. And if the S&P 500 was at 422, you would make $100. So pay 30 to make 100. What we're actually looking to do is get into a credit spread. So we want to sell it. So now you can see above, it has changed so that you see sell the 421 and buy the 422. So for $30. So this is a credit. We would receive $30 up front. And if the SPY was to remain below 421 for the end of the week, we would keep all of that money. Worst case is if the SPY was to get to 422 or higher, we would have to close out the spread, which is $1, so $100. So we would owe $70. So essentially, our risk here is less than our potential reward, but the levels of probability are much higher with this kind of trade. Now on Webull, if you were to click on this little vertical button up here, this is going to be your risk to reward, your risk profile for this particular contract. And as you can see, the break even is 421.3 because 421 is the lower strike and $30 or 30 cents is the credit. Our max profit is $30 and our max loss is $70. It's as easy as that. That is the risk profile for this call credit spread. Now, the reason why I like this is because it allows us room to the upside. 421.3 is our break even. So our break even is around 1.25% from the current price that's just below $416 a share. So the stock, the index can move up 1.25% in 5 days and we would still be at break even. So that gives us some room to the upside, which is increasing our levels of probability. On the flip side, a put credit spread in this case isn't as attractive. If we look for something that has the same premium, we're looking at the 413, 414. If we were to click on that and we were to go to sell, and then we were to click on our vertical, here you can see that our risk to reward setup is the same. We were receiving $30 and we would potentially have to pay $70 to close out if the trade went against us. But our strikes are so much closer to the current price, and with us being at resistance, the levels of probability of it dropping, in my personal opinion, are higher. So this trade is actually less favorable in my eyes in the current setup right now. But if things were to change, and let's say that we were at a support line, then this strategy would work out well. Then this strategy would be more favorable than a call credit spread. It's all based on where we are with the technicals. So ideally, when we get to resistance levels or supply zones, we're looking to sell call credit spreads. And when we get to demand zones or support levels, we're looking to sell put credit spreads. So there you have it. That is a trading strategy using options on the SPY. You can use this on the SPY, obviously, or you can use it on the QQQ, or maybe even on an individual stock as well. Now, if you're interested in live trade alerts, whenever I enter trades, whenever I trim them, whenever I close out my position, and whenever other members in the community get into trades that they're willing to share, it is all shared on the private Discord server, which you get access through the Patreon. A link is provided down below in the video description. Outside of that, I thank you so much for your time. It's been real, it's been fun, it's been real fun, and this is We Are Investing. See ya. I'm out.